morning. You've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao, and with me is Varun Hiramat. Hi, Varun. Morning. Why don't you kickstart with the headlines?
Hi, Karunya. Good morning. Sure, I'll do that. It's been a thrilling Thursday so far. The Nifty has surged above 10,500, once again crossing a major milestone. This is on the back of hopes of a COVID vaccine soon from Pfizer and BioNTech. Sensex is also up 350 points, barring realty. All sectoral indices are in the green. So quite a firm start for the market this morning.
Absolutely, and of course it's the COVID vaccine and the potential possibilities that it throws open is something that is keeping the markets abuzz locally and globally. So you have BioNTech, like Varun flagged off, and even Pfizer vaccine that is showing potential in human trials. So this is also an important update to watch out for.
Most definitely, Karunya, it's keeping the global markets alive. And then coming here to our domestic markets, yet another ET Now exclusive news break confirmed. Axis Bank to raise up to 15,000 crores via shares and other securities sale, possibly even a QIP. ET Now was first to report this news about Axis fundraise plans on July 1st. Yet another confirmation for us there.
An important report that we are also focusing on today is from the Economic Times that the government may look at rationalizing GST rates. So important if this happens. So yes, something that we're tracking in trade today as well, along with market-related news.
Right, Karunya. And in what's interesting, possible privatization of a certain part of the railways, the government has invited bids for 151 private trains on the railway network.
Okay, and lastly, you have some relief coming in for the NBFC space. RBI has issued guidelines for special liquidity facility to support the sector, not just pure NBFCs, but even HFCs as well. Turning back to the markets once again, Sensex is trading higher by 300 points. You have the Nifty trading firmly above the 10,500 mark, and even the broader markets are looking very, very cheery. Mid cap is up 0.5%, small cap is up close to 1% in trade. All the indices as well, the sectoral indices were firmly in trading firmly in trade, barring the PSU Bank and Nifty Realty, which are wherein some names are actually witnessing some pressure. Nifty Bank has also cooled off a tad bit from the opening highs, but you have a Nifty Auto looking very firm, up 1.1%. Nifty IT soaring in trade. The index is gained in the excess of 2% as we speak. Some names from the pharma and metal index also holding out quite smartly. From the benchmark index, you have an M&M leading the rally today. It's up 4% in trade. Given the way the numbers spanned out for them, they've been on a winning streak since yesterday. Infosys, another stock, another heavyweight to focus on, which is adding a fair amount of contribution to today's rally. It's up 3.3%. You have a Hero MotoCorp, an ONGC, IOC, TCS, Wipro, HCL Technologies. So it's really the IT heavyweights which are pulling the markets up in today's trading session. And what's bucking the trend, like of Axis Bank, Eicher Motors, UPL, Vedanta, some names, but very few, I would say, because the favor clearly is in is with the gainers today.
Karunya, most definitely seems to be. Let's now, on that note, bring forth our guest. Vikas Sethi, I think, is now ready and with us. So good morning, Vikas, and welcome to the show. Continuous strong show from Nifty, ignoring any possible negative Q. We're now, today we again crossed the 10,500, which is what numerous analysts were saying was a critical resistance. If crossed, could mean incremental more upside. So what's your thought on that?
Good morning, Karunya. As far as our markets are concerned, they seem to be in fine fettle. I continue to remain in the market. Just a sec. I continue to remain. I feel with the kind of positive which are coming in from also yesterday, smart Dow also after Pfizer said they were or their vaccine has gained some success as well, curing is concerned. So, and plus we have some way as far as our and the banking sector is concerned. All in all, there is a bit of good news plus the system with the
Yes. Okay. Well, I think we've got Vikas on a bad line. We'll try to fix that. Meantime, Kunal Bothra is also ready. So let's take it across to him. Morning, Kunal. What are your trading calls for today?
So good morning, Karnya. I'll be looking at a couple of mixed trades for the index, and I believe that there are many stocks which are still trading showing signs of weakness. So I think in that regards, I would have a couple of sell calls as well. So the first one is apparently a sell call on Godrej Consumers. Now the stock, which has been trading at a strong degree of uptrend, many of the breadth indicators have started to weaken out for Godrej Consumers. And I believe even the contrarian signals on the sell side indicate that the stock has entered into the overbought territory. So I would expect some weakness coming back into the stock. Hence a very short-term oriented sell call on Godrej Consumers, targets of 660, stop loss at 710. M&M on the other hand, Mahindra & Mahindra I think is showing signs of a breakout on the upside. So there is this rectangular channel pattern getting formed for M&M, which is almost a 25 to 30 point band for the stock. So I think keeping that in mind, I believe M&M could be a good buy from a short-term view, specifically with a target around this 540 to 550 zone, and stop loss could be kept at 500 mark.
Okay, great. Thanks for that, Kunal. I think Vikas is now back with us on a less choppy line. So Vikas, we couldn't hear anything you really said. So if you'd like to begin again with what your current read on the market is, and if you have any stocks you'd like to talk to us about.
Yeah, good morning, Varun. Actually, you need to fix this problem. I'm getting echoed. My voice is coming back to me. So if you can ask your technicians to just fix up this issue.
Guys, I think we've got Vikas on a patchy line yet again. So should we perhaps just review that, and let's move forward with the queries with Kunal for now. So our first query, Kunal, for this morning revolves around ITC, and we have Rajkumar Shah from Indore who's written to us, and he's bought 200 shares of ITC at a slightly higher price than where it is now, 230, and he wants to know if he should sell or continue to hold. So what's your advice to him?
My voice is echoing actually.
Waiting on ITC, I think it's a stock which is finally showing some signs of respite and some signs of a breakout on the long-term time frame. And look at it this way as well: the markets are trading into a decent footing right now, assumingly that over the next few months, there is volatility which tends to come back again. ITC is relatively low beta in that regard. So the worst part of the trend could probably have happened in the last 2-3 years, and I think things seem to be now getting better for ITC in that regards. Look at the last 4 months or 3 months of this price trend, and specifically there's been a complete change of approach towards volumes for ITC on the cash side specifically. So that generally also indicates that there is an interest from the institutional or the stronger participants from the market. So I think in that regards, ITC looks quite strong, and I believe if you've bought at lower levels, I see no reason why you should be booking out early. You should be holding on to it from a longer term view.
Okay, so that's the verdict on ITC coming in from Kunal. In fact, the stock has been a huge talking point. It's been a slow mover in the past, but right now, over the last many days, it's been doing fairly well. In fact, barring I think 2-3 sessions in the last 1 week, in the last 10 days, the stock has shown a very solid upsurge. The entire fortnight, if you see, the stock from 180 levels right now trading at 204, 205. Yes, slowly and steadily with some minor blips coming in here and there, the stock has been able to show continued uptick and continued resilience, which is a rare sight given how it typically tends to move. Vikas is also back with us. Vikas, we were talking about ITC. We got a query regarding that. Our viewer had bought it at 230 rupees levels and wants to know what he should do with his investment. We've got the technical pick from Kunal. What is your view on the fundamentals for ITC?
Yeah, Karunya, I hope I'm audible now. Am I? Yeah, okay. Well, as far as ITC
Yes,
is
you are.
concerned,
Please, go ahead.
it's fundamentally a great company, but the stock has not performed. It has been an underperformer when you compare it with other companies in the space. But I think since past few months, the stock has rallied from its lower levels of around 150 to the current levels of 200. They declared pretty decent numbers for this quarter, and they've also announced a hefty 10 rupees dividend on the stock. I think the investor should continue to hold on to the stock. Although it's sitting in losses, I think if he gives time to the stock and waits for, say, 9 to 12 months, I'm pretty bullish. We could see levels of 275 rupees on the stock. So I would maintain a hold on ITC.
It's a hold coming in from Vikas as well. Moving on to our next email then, it's from Ankur Gupta. He's bought 100 shares in Tata Steel at 270 rupees and he is a short-term trader, wants to know how the prospects look like. He has made a good amount of money in it already, Kunal, and the stock has also been doing very well, and you too have been bullish on this for a while now. Do you continue to stay bullish? Do you want him to continue to stay invested in the stock, or should he book his profits?
So I think ideally you should book out 50% of your profits. There are no two doubts about it. You see, the markets are looking good, but then it just takes one day for the markets to go through a reversal process. So keep that outlook always in mind. And especially I think talking of Tata Steel, I think the last time when the stock hit a high of 350 levels, that was almost a month back. From there on, it's been struggling to come back to 350 yet again. So it's showing signs of respite every now and then, but it's not resulting into a meaningful uptrend or a breakout. Now, whether that's probably a consolidation for the stock to break out in the upside on the longer term view, it's difficult to sort of put those parameters in place. But what I would suggest is, since you bought at lower levels of 270 approximately, I think the stock is at 325, 330 levels, book out 50% of your profits, or else have a trailing stop loss which should be around this 318 or 316 mark for Tata Steel, because that's also a trend line support for the entire month of June and July starting. The stock has been taking support at those trend line levels. So if that trend line breaks, then it's possible that the stock can go through a medium term reversal as well on the downside. So I think it depends on the profile of the investor, of the viewer. If you're looking to book profits, then I think current levels is good enough where you can book out at least 50% of your profits. Or if you want to trail your stop losses, keep 318 on spot levels as a stop loss for the trade.
All right, so Kunal recommends dropping your exposure by 50% here if you're in the money. But Vikas, what's your take on Tata Steel?
Now, Varun, as far as Tata Steel is concerned, that way I'm bullish on the stock. I feel the entire metal sector should perform from here on. The worst seems to be over. The recent results declared by the company were operationally good, and I remain bullish on the stock. And I think from the current levels, if one has a view of around, say, 1 year, one could see substantial upside on the stock. So I would maintain a hold on the stock at the current levels, and I think we can easily see targets of around 450 on the stock in about a year's time.
All right, so Vikas a lot more positive on this stock than Kunal, but both of them fairly positive. So for our viewer, Ankur, I hope that helps you out. The next query is from Balkrishna Jain, and he wants to invest in banking stocks. He's not been clear about private or PSU or about size. He's just looking at the sector as a whole. So Kunal, while you may not, actually you could probably give us a technical view on the entire sector as well, or the bank Nifty perhaps. What's your read on it?
So I think here the most important criteria for you to invest is your time frame and your risk appetite. So these are two very, very important criteria before you try and look at recommendations maybe from me as well as from Vikas in that regard. So the first and most important point is that Bank Nifty has been an underperformer in this leg of rally. Now every trend which begins for markets, so whether it's a new trend in the making, has a certain set of characteristics. And those characteristics, they tend to last for a longer duration of time. So in the last 3-4 months, the first and foremost characteristic is that Bank Nifty has underperformed, and that's primarily because of the heaviness from this large cap private sector banks like ICICI, Kotak, HDFC, etc., which I've been discussing on the channel time and again since last few weeks and months. Now, if these stocks manage to break out, then there is an altogether different case that the bank Nifty could break out on an upside with a strong amount of momentum. But then I think if you're looking to invest from a longer term view, I would suggest go with the private sector banks in the expectation that these stocks could at least outperform the other peers on the PSU banking names. So we've seen rallies emerging into Bank of Baroda, then SBI, etc. But remember that they are traditionally very high beta stocks, and the larger part of the trend or the meaty part of the trend, it generally lies with the private sector banks. So I think it's much more better and much more prudent that you invest into the large cap names first. So invest in names like ICICI Bank, HDFC Bank, even Kotak Bank at current levels. I think looks fairly attractive. So concentrate your majority of your exposure there, and then if you're looking to add on to some of the banking names, then maybe look at the mid cap end of the banking stocks. I think Bandhan Bank has done reasonably well in last few weeks and months, and then probably add maybe an SBI on the PSU banking name, which also looks fairly attractive from a longer term view specifically.
Vikas, which banking stocks are you liking from the entire gamut?
Yeah, Karunya, my views would be pretty much similar to Kunal's views. If one were to invest in banking sector from a long-term point of view, I think the top three names would come from the private sector banking space, and they would be the large cap private sector stocks like HDFC Bank in that order, ICICI Bank and Kotak Bank, which Kunal also recommended. And if one were to pick from public sector banking space, I think State Bank of India would be the best bet. But even Bank of Baroda and PNB, after their recent results and the kind of fall which they've seen, I think at the current levels, they also look pretty good. And from private sector banking space, if one were to look at the second rung banks, then I think Federal Bank makes a case for investment at the current levels or on any decline. So these are the banks which are like.
Giving us some PSU picks as well, and then Federal, and then we all heard what Kunal had to say. So on that note, thank you to you both, Kunal and Vikas, for joining us this morning, and we look forward to chatting with you in the near future. Before we move forward, let's address the BNSN stock cloud for this morning. These are our 10 stocks which we always bring to your attention for the various reasons that they may be in focus. They all seem to be moving the market in one way or another this morning. So let's begin with Axis Bank, and need I state the obvious, we're getting news, and ET now again an exclusive with this one, 15,000 crore likely to be raised. We'll be looking out for commentary from that one today. Fairly active in trade over the last 3 sessions. M&M, they've been on the channel as well recently and talking a lot about the tractor sales as well as the overall rural outperformance versus urban, so that's why we're flagging them off. And IndusInd Bank has been a bit choppy, but that being said, again, with all the fundraising activity looming for banks, one wonders whether we might hear something from IndusInd as well. Infosys on the back of all that's happening in the IT sphere. Bandhan Bank, as our analyst just flagged off, one of the better performing mid-cap banks, and even some of the MFI commentary coming out is a lot better nowadays. Cadila as one of the top performing pharma stocks, and also something that's in focus because of the drug offerings that it has. RBL Bank again, because it's made a very sound recovery. Credit card business is on the uptake and it's really recovered from the lows which we saw earlier in March. India Bulls Housing Finance on the ring fencing, and it did very well but saw a bit of resistance recently. IDBI Bank, because it seems to be doing quite well. And then Pfizer, obviously, in the back of the fact that they are now heading, or spearheading rather, the race toward the vaccine, and some really positive commentary coming out of there last night from the United States. So that was our stock cloud, 10 stocks that we bring you daily. But earlier in the day, we spoke to Sandeep Sikka, the ED and CEO at Nippon Life India Asset Management. We asked him about the mutual fund industry and the market outlook. Let's listen in.
I think the way you have to see this is, and I think markets typically overreact. Whenever we see, I think we saw with the correction when it happened in March, I think we saw Nifty coming down from 12,000 to almost 7,500. And for sure, as the economy is opening up, and I think a lot of businesses, some businesses have for sure been impacted by the COVID. Some have, there's going to be slowdown because of the lockdown. But I think overall, I think people are realizing things may not be as bad as, it was. A lot of, the household saving we have been seeing, which used to come in SIPs. The same SIPs continue. We have not seen investors terminate their SIPs. I think that's also a sign of maturity of these investors over the years, because earlier we used to see whenever there was a correction, a deep correction, investors used to stop their SIPs. But that's really changed this time. So I think it's a mix of multiple things. And I think one is also realizing the economy for sure, whether 1 or 2 quarters are gone, but things may not be as bad as they appeared 2 months back.
Sure. You know, the other thing, Sandeep, in the market, while we may be fascinated with the Nifty number, is that some of these penny stocks as well have held up a fair lot. That's looking a little unsettling, if I can use that word, that it's the quality of names going up, which is a little discomforting. That aside, what's the message that you are handing out right now? Stick with quality, or is there a better chance of the broader market actually leading recovery and bigger money to be made when it comes to the small and mid caps?
As an asset management company, I think we prefer sticking with the quality. I think we believe it's important to stick with the bigger names, the quality. I think the balance sheet is more important than the P&L at this point of time. So overall, I think if you see our portfolios are getting more aligned to quality. We have seen a lot of changes within the largest segment where we had invested was financial services. Within financial services also, I think we are going for high quality names. So, but to your question, I think we would like to stay away. I mean, I advise investors who are directly investing also to stay away from penny stocks. I think the quality and the balance sheet is more important at this point of time.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. Time to focus on some stock-related developments as well. Axis Bank continues to hog the limelight, and it's on back of a big ET Now news break that has been confirmed. Axis Bank is looking to raise 15,000 crores via share sale. Ajay is standing by. He broke the story first for us. He has more details on it. Ajay, take it away.
Well, Axis Bank board has informed the exchanges that they're planning to raise 15,000 crore worth of money by issue of shares. Now, this is in line with what we reported yesterday afternoon, that the board is meeting to consider share sale of $1.5 to $2 billion, and very strong interest has been shown by private equity players, Bain, which is already an investor, and even Carlyle, which is likely to be a new investor. Interactions have happened between the management and these private equity players, but the full fundraise plan will be a combination of stake sale to private equity players, Bain and Carlyle. Some part of it will be a QIP for DIFIs, and some warrant portion would also be there. That's what we understand from our sources, and part of the news actually has come out. In next few days, we'll know exact proportion of division of how much will be raised via what issue of shares to which category of investors. But we understand that there is a lot of interest in participating in this offering from Axis Bank. It has done relatively well, and the strong franchisee top quality banks are managing to raise capital from existing or even new investors very well, and that's what we are picking. That trend is likely to continue with Axis as well.
To the railways, it seems that a privatization thrust is underway, with the government possibly opening up bids for 151 private railways. Let's go across to Avan for more.
Well, the railway sector, which employs millions and of course transport millions from one place to another, is set to get a new lease of life, and this is largely on the back of the moves by the Railway Ministry talking about privatization within the space, which is definitely going to breathe a new lease of life. In fact, the ministry said that they've invited qualification proposals from private entities to run trains of over 109 pairs of routes by introducing 151 modern trains. So this project is going to entail private sector investment to the tune of nearly 30,000 crore rupees. So the original 109 destination pair of routes have been formed into 12 clusters across this rail network, and each train will have a minimum of 16 coaches. This is definitely going to be a big positive in a number of ways. It will introduce modern technology, rolling stock with reduced maintenance, reduce the transit time significantly, boost job creation, as well as provide enhanced safety and provide a world-class travel experience, according to the Railway Ministry. And a lot of these private entities are going to be responsible for the financing, the procuring, the operations, as well as the maintenance of the trains. And in fact, they're going to be designed for a maximum speed of about 160 kilometers per hour, which means that the running time taken by the train will be comparable to or even faster than the fastest train of the Indian Railways that's operating in the respective route. The concession period for the project will be about 35 years. So this is definitely sending a lot of those railway stocks buzzing in today's trading session, or should I say chugging along in trade. All right, Avan, thanks so much for getting us those details. Before we move forward, here's a quick thank you to all our viewers for once again choosing ET Now as their preferred destination for all the market-related updates, for all things corporate and policy. Thank you so much to our viewers who are watching us day in and day out, week after week. All right, let's get you that ET Now insight then. Jayesh is standing by to decode PSU's performance. Jayesh, over to you.
The markets not across the globe but Indian equities as well in the last few months that we have seen, and one segment of the market that has stood out really well has been the PSU basket. Let's have a look at the outperforming stocks and whether these stocks have gone up on high volume and is there valuation comfort. Starting off with the outperforming stocks, you have BEL and BHEL from their 18th May low. Both of these stocks have gained more than 35% each. And you have Container Corporation, REC as well as NALCO, which have given you about 15 to 20% return that we have seen since their 18th May low as well, along with SAIL and PFC also giving you more than double-digit return since their 18th May low. Now, this has come on the back of good volumes as well, because if you have a look at BHEL, 90% increase in its daily traded volume that we've had on an average basis as compared to the entire year as well. Container Corporation more than 50% jump in its volume, and you have REC and NALCO which have also jumped more than 40% as far as their volume picture is concerned. BEL has given has surged on the back of good volume, more than 25% volume increase that we've had for BEL, and all of this has been backed by valuation comfort as well, because most of these PSU stocks actually trade at a discount to their 5-year average, be it Container Corporation, REC or PFC.
Right, that was Jayesh talking about the appeal of select PSU stocks because they're trading at such low replacement values or price to book, whatever you want to call it. But switching gears a little bit to the TMS, and that's the money show which Mobina does. Do you feel that you're left with almost no money at the end of every month? Have you prepared yourself for unforeseen events like perhaps losing your job or COVID-like situations? On the Money Show's Personal Finance Masterclass, we caught up with Pranav Mishra, Head of Retail Liabilities of ICICI Bank, to help you understand the ideal way to divide your monthly earnings. Let's listen in.
When you talk about any individual who's on to his career or maybe at a 30, 35 years of age, 50% of his expense or take-home salary. When I say take-home is primarily a salary which comes post your deduction of, if you're a salaried one, post your deduction of your provident fund and your taxes. So when the take-home comes in, 50 will go towards essential, 30 will go towards your wants. Wants means I need some interiors to be done, or I want some clothes to be bought, or some accessories to be done. So 30 goes there, and the remaining 20 is. Now, it should not be remaining. So one should always be very clear about that. One cannot be an empty pocket if he or she tends to make 20% first of all allocated and then go on for his 50% to be spent on essential and 30% towards what you called as towards the wants. So there's a differential between an essential versus the so-called luxury, or today I'll not call it as luxury, I'll say wants. One very clear-cut thing that the thumb rule is that one should apportion 3 to 6 months of his income towards emergency fund. And why I'm saying 3 to 6 months, a person who has worked for a decade, so a 10-year of job, one should see to it that 3 months of his annual income has been accumulated, because that can take care of next 6 to 7 months of sustenance. Because in a situation which is abnormal, or a situation where somebody loses job, people tend to bring down their expenses. So 3 months for a decade of work, if somebody has worked for 2 decades, he should move towards a 4 to 5 months. And then somebody who has already given more than 2 decades of work and has only 5 or 7 or 10 years nearing towards 60, should have a 6 months accumulation, because that's very critical, because you have to keep yourself floating and you have to keep yourself sustaining till you get onto the situation which is far superior than job loss. So keep 33% towards safety, keep 33% towards liquidity. That liquidity part you should immediately, you can use in the month where something has happened, and for a month or two. And then 1/3 of the money on the emergency fund can be on a return-oriented instrument. But having said that, very clearly, liquid assets or something which is interest generating or an income oriented should be the asset class preferably to be put in. So I would suggest fixed deposit, recurring deposit, your what you called as savings bank account, into liquid funds of mutual fund, and some debt or asset allocation fund. So one can look at these to keep the emergency fund, because it cannot have a situation where you put that into a very high return bearing and the risk is high, and you may see that the erosion of capital happens. So no risk taking kind of an instrument should be there as part of emergency fund purpose.
Well, that was yesterday's class. Today, on the day 4 of Personal Finance Masterclass, get your portfolio vetted by top mutual fund manager Nilesh Shah of Kotak AMC. Will help you realign your investments for the post-COVID world. Tune in to the special series of The Money Show at 5 p.m. today.